In today's video, you're going to be learning how to trade gold using supply and demand. Furthermore, I'm going to be explaining how to apply liquidity concepts when trading supply and demand, how to identify the correct forms of market structure to have very high probability entries, and how to correctly use the Fibonacci retracement tool. We're going to do a full trade breakdown on gold, including the entry, the stop loss, and the overall take profit level, so that you can exactly understand how to enter the market when trading gold on a daily basis. Now, without further ado, let's dive straight in. All right. So we're here on gold on the daily time frame, and the very first thing that I always want to do is understand where are we currently trading. So when I look at this overall chart, I'm going to first of all identify my swing structure, because when looking at MS, which I also call market structure, I look at two forms of market structure. Number one, we look at the overall swing structure, and number two, we look at the overall fractal structure. So when it comes to the overall swing structure, you're just looking at the overall swing in price. So here on gold, it is very clear that the overall market structure is bullish due to the fact that we are creating higher highs, higher lows, higher highs, higher lows, higher highs, and we're looking to establish a new higher low to then trade back up higher in towards a new potential higher high. Now, the second form of structure is a little bit more difficult, and it's called fractal structure. And when we look at fractal structure, we look at the most recent market highs and lows. So the easiest way to pretty much do this is like this. So what I want to do now is I want to mark out my overall high, which is, for example, over here. And then what happens is that the high gets broken. Now, the overall low that broke this high over here, because you can clearly see we get a push up, we get a pull back down, we get a push up. The most recent low that broke this high is the low of this bullish candle. This is therefore now my fractal low. Now what happens is that we continue to break the high, we break the high, we break the high, and we establish a new high, and this is where the overall pullback starts. Now at this point in time, this, and I'm just going to remove the Fibonacci retracement tool, this is now my fractal structure. And what I'm now waiting for is for the overall pullback to take place. Then I want to see a fractal structure shift, and then I want to look for a long again. This is my overall very simple rule in order to look for an overall trade continuation. So what we can see here is that the market tends to consolidate, and then it breaks in towards the downside. So at this point in time, and a wick break is enough, we see a fractal low break. That now means that my fractal high is the high of this bearish candle, as this is now my most recent high, which broke this low. Now at this point in time, what happens is that the market retraces again. This is now my fractal range, so called, and I continue to follow the overall market structure. Now again, drawing in that Fibonacci retracement tool, you can clearly see that the market has now retraced into the 0.5 fib, and I might now be interested in looking for longs once we break the fractal structure here, get the retracement, get the confirmation, and then look for longs. Because remember, when we look at market structure, we're looking for 2 points of confluence: fractal confluence and swing confluence. So now we have the swing confluence from this low in towards this high, but we do not yet have the fractal confluence. So that is now currently what I'm waiting for. So what we see happening here is that a lot of momentum comes into the market. That means that we break the fractal high. This doji candle's low is now my fractal low, as this is the most recent low that broke this high. At this point in time, the overall sub for the buy then becomes your area of demand, and you're now potentially looking for further longs in towards the upside. Now, to give you some more clarity, because I'm going a little bit fast here on what the overall confluences of this strategy are, what you want to do is write down MS, you want to write down SD, you want to write down LIC, you want to write down PVD. Okay, so these are the four main confluences that you're going to be applying to this chart. So the first piece of confluence is the market structure one, where we have two forms of market structure: fractal and swing. As we understand, the swing structure is now bullish from this low in towards this high, and the fractal structure is now bullish from this doji candle's low after breaking this overall high. We have an area of demand in the form of the sub for the buy. The only thing that we do not have though is liquidity, because your overall liquidity low, and I'm not sure if you guys noticed that, is the low of this bearish candle over here. And as you can see, we have still left equal lows behind, and preferably I would have wanted to see this low, take out that bearish candle's low, tap in towards this overall area of demand, and then look for an overall long position. So what I'm now doing is I'm going to wait for the market to retrace a little bit deeper, and as we can see is that we see that overall deeper retracement. Now just removing and cleaning up the charts again, because I love a clean chart. Here what you're able to see, I'm going to remove the old fractal lines. Here what you're able to see is that we get a fractal low break. That now means that the high of this bullish candle is now your fractal high. We've taken out liquidity, which was resting underneath this overall doji candle's low, and we've tapped into the overall strong area of demand. Now this is a very strong area of demand due to the fact that it is a sell before a massive buy up, which also took out these ascending lows in the form of liquidity. So this for me is an overall liquidation zone. Very important to take notes of. Liquidation zones will always be extremely strong. So now looking where the market is again trading at, and inputting the overall 4 confluences that we like to use, we can see 1, market structure is bullish. We have retraced in towards where? In towards discount prices. So everything underneath the 0.5 fib is discount prices from where I'm happy to go long from. So that's the first piece of confluence. The PVD, we've ticked that box off. Now, if we look at liquidity, remember we've taken out this liquidity low, so we've ticked off that box. Supply and demand, we've tapped into a daily demand zone, so we've ticked off that box. And market structure wise, we are bullish from this overall swing low in towards this overall swing high. Now, the only piece of confluence that I'm still waiting for is for us to break this dotted lines high. So what then happens is that we break the dotted lines high over here, and this is now therefore our area of demand, this overall sell before the buy candle, which broke the overall fractal high. So now what you pretty much have is confirmation that this overall demand zone here, that overall daily sell before the buy, that is a valid demand zone, because we're validating demand by creating a new demand zone with that fractal break. So now what I'm waiting for is for the market to retrace into my demand zone. And by the way, for your knowledge, at all times, the fractal structure remained bullish. And I'm going to give you guys a little tip here, because an easier way to use fractal structure is the fractal structure break indicator. You can find the link to this indicator in the description of this video. But what you can see here very clearly is that the fractal structure remains bullish, because this here's my fractal low, this here's my fractal high. And the good thing about the indicator, by the way, is that it also gives you the past fractal breaks that took place. So we're now bullish again on a market structure level on both swing and on both the fractal. So for myself, I now have a valid overall entry to take. So again, drawing in the fib here on the fractal structure, you can also see that we've retraced underneath the 0.5 fib, and that is where price is finding support. So now what I do is I go to the 4-hour time frame and I look for my overall entry. Now again, on the 4-hour time frame, you can pretty much use the exact same confluences that you use on the higher time frame. I'm just going to clean up my chart for you guys to keep it as simple as possible. Because here what happens on the 4-hour time frame is that we get a break of structure in towards the upside. This is my swing low, this is my swing high. Okay, so again, using the exact same confluences, I'm going to write them down for you here. We have market structure, we have liquidity, we have SD, also known as supply and demand, and we have the PVD. So I'm going to go over them one by one again. Market structure wise, we are bullish. You can see that the market pretty much retraces exactly into the 0.5 fib. So I'm happy to look for a long position. So PVD marked off. Now, do we have an area of supply and demand? Well, yes, we have a area of demand here in the form of these overall imbalance candles over here. So this is an imbalance candle that broke market structure in towards the upside, or you could take obviously this overall area of consolidation, as consolidation can also be seen as demand. So we consolidate and then we get a big push up, breaking market structure. So we also have an area of demand. Now, do we have liquidity? Well, yes, because we took out these two equal lows over here. So yes, we have liquidity. And as you can see, after taking out that X low, we see a V-shaped reversal in towards the highs after tapping into demand and tapping into the 0.5 fib, making the overall long valid. Now, from a market structure perspective, we are swing bullish from this low in towards this high. And do we have bullish fractal structure? Yes, we do. As you can see, that's how simple it is with the indicator. You can see the fractal lows here, the fractal highs here. Now, what is then your area of demand that breaks this overall fractal high? Because it's the fractal high break, this black line. That is, again, and you can even use the 50% body candle indicator if you want, but this imbalance over here. This for me is now my valid area of demand. That is where I want to enter with my stop loss underneath the fractal low, trading the overall upside continuation. You can either choose to target a 1 to 2 or a 1 to 3. For the simplicity, I'm targeting a 1 to 2. Now, you place your stop loss underneath the fractal low, entry on top of the demand zone. You target a new higher high in line with the overall swing structure and the fractal structure. We get tagged in, and as you can see, you hit your TP. Now, this is exactly how you can enter the market on a daily basis. This works on every single time frame. In this example, I'm using it in combination with the daily and the 4-hour, but obviously what you can do is also go down a time frame into the 1 hour, and then on the 1 hour, what you for example see here is that after tapping, let's say, into this demand zone, we get the V-shaped reversal up, we get the fractal break, sub for the buy becomes your demand, and from there we fly up higher. So this is also applicable on the lower time frame for your knowledge. So I hope you guys enjoyed this video. If you have any questions, let me know in the comment section down below. Thank you for watching, and see you in the next one.